Thank you for taking time to attend this toll hearing. My name is Joe Resta. I am the Executive Director of the Delaware River Joint Toll Bridge Commission. This is the first time we are holding virtual hearings like this, so please be patient and understanding if any issues arise. This virtual process is new to all of us. We are holding this hearing to take comment on the Commission's first system-wide toll adjustment in 10 years. The proposed toll rate changes were developed in response to the deep traffic and revenue losses we experienced last year in the wake of the COVID-19 pandemic and the economic recession it induced. Traffic and revenue declines have continued into 2021. Toll collections in each of the first 6 weeks of this year have been short of projections. The Commission's financial footing has been undermined. Travel patterns have changed as the coronavirus, lockdowns, and a fragile recovery have affected commuting, travel, and shopping. This new reality came into sharp focus during the second week of April last year. In that 1 week, we saw a 58% decrease in toll transactions compared to the last pre-pandemic week of normal traffic flows in early March. The comparative loss in that single April week was more than $1 million, an indicator of a slow and steady erosion of the Commission's finances over subsequent months. This graphic illustrates just how much traffic, particularly passenger vehicles, were affected by the spring 2020 lockdown period. During that big dip that you see from mid-March to early July, we lost nearly $9 million in anticipated revenue. Traffic recovered somewhat after businesses began reopening from late May onward, but our toll collections never returned to pre-COVID norms. This further worsened the Commission's financial outlook. We recorded 11.8 million fewer toll transactions and took in 9.36% less revenue than was forecasted for 2020. We ended the year with a big hole, $14.5 million less revenue than projected. While federal interest rate policy changes further deepened the financial hole as the Commission realized $1.3 million less than expected on reinvestment opportunities. Recognizing the evolving revenue crunch, the Commission took a series of proactive steps. Job hiring was halted after the Commission's February meeting. New capital project starts were postponed. They remain on hold to this day. In crafting the agency's 2021 operating budget, discretionary spending lines were cut 10% and all salaries were frozen for the year. We also sought federal CARES Act stimulus funds in an attempt to offset a portion of the toll losses. Regrettably, we were unsuccessful in securing a piece of that funding last year. The Bridge Commission's public service mission unfortunately does not change in a tough economy. We still must operate 24 hours per day, 7 days per week to move commuters and commerce. Our bridges and roadways must remain open and be maintained. We are still obligated to perform responsibilities like public safety and security, or plowing and de-icing in winter storms, or collecting tolls to fund operations and pay financial obligations, or the Commission's ongoing capital and maintenance duties. The Commission owns and operates 8 revenue-generating toll bridges. It also operates 12 non-revenue-generating low-capacity bridges. We call these smaller and generally older crossings toll-supported bridges because their operating and maintenance costs are paid through a share of the revenue collected at our toll bridges. This organizational framework, required by the 2 states by statute, and also by the Congress under the Compact Clause of the United States Constitution. We are barred from tolling the 12 toll-supported bridges. The toll-supported bridges provide additional travel options for our patrons. Last year, these bridges carried twice as much traffic Pennsylvania bound, the toll direction at our toll bridges, as they carried New Jersey bound. For example, even with the depressed traffic of 2020, toll-supported bridges carried in excess of 18 million vehicles in the toll direction, as compared to our toll bridges, which carried in excess of 38 million vehicles in the toll direction. We're the only bi-state toll agency with such a unique mandate. So we've reached a point where a toll adjustment has become necessary. Tolls are the Commission's sole funding source. The Commission does not receive any funding from New Jersey or Pennsylvania. It also does not get a share of state or federal gas tax revenues. Tolls are what pay down our debt service costs for capital projects. They fund our services, everything from snow plowing to roadway lighting and state police responses to accidents and emergencies. Tolls are what allow the Commission to fulfill its mission of ensuring safe and efficient travel between the states. Faced with the $14.5 million toll revenue drop in 2020 and the continuing declines in 2021, we are proposing a system-wide adjustment. The proposal, if approved, would address immediate financial concerns while allowing the agency to fulfill its regional transportation mission for years to come. We are recommending this course of action now because any deferral or delay would necessitate even steeper toll increases at a later date. The proposal would allow for the establishment of a two-tier toll structure that bases rates on the cost of a respective collection method. This is the prevailing tolling industry trend. EasyPass customers would pay lower rates. Higher rates would be applied to drivers who pay cash at our 7 oldest toll bridges. This policy of higher rates for non-EasyPass transactions is already in effect for toll-by-plate customers at our new Scudder Falls Toll Bridge all-electronic tolling point. Cash and toll-by-plate collections are significantly more expensive compared to EasyPass. On average, more than 75% of the Commission's toll transactions are now made through EasyPass. Long-term, the charging of comparatively lower EasyPass rates should encourage more cash toll-by-plate conversions to EasyPass. Outdated EasyPass discount programs would no longer be used to further incentivize EasyPass use. The proposed toll adjustments would be implemented in 2 stages. The majority of these rate adjustments would take effect on or after April 3, 2021. A second stage of limited adjustments are proposed on or after January 6, 2024. The proposed 2021 adjustments for our 3 largest vehicular classifications are as follows. First are Class 1 personal vehicles, which include cars, motorcycles, SUVs, pickup trucks, and other vehicles with 2 axles and below 8 feet in height. The Class 1 EasyPass rate would increase by 25 cents to $1.25. This is the same rate that has been charged at our Scudder Falls Toll Bridge since it opened in July 2019. The Class 1 cash toll-by-plate rate would be raised to $3. The surcharge for Class 1 vehicles with a bumper hitch, trailer, and tow would be increased by $1 to $2. This surcharge applies regardless of the number of rolling axles on the trailer. As is already the case, pickup trucks with a gooseneck, fifth-wheel trailer in tow will continue to be charged commercial per axle rates. Class 2 vehicles, which have 2 axles and are 8 feet or above in height, would be charged $4.50 per axle for EasyPass and $5 per axle for cash toll-by-plate. Among vehicles in this class are small box trucks, flatbed trucks, school buses, small recreational vehicles, and certain sprinter and conversion vans. Class 5 vehicles, which have 5 axles, largely consist of standard tractor trailers. Just as with Class 2 vehicles, Class 5 trucks would be charged $4.50 per axle for Easy Pass and $5 per axle for cash, toll by plate. The proposed Class 5 rate change would also apply to 3-axle recreational vehicles towing a car or a 2-axle trailer. The full schedules of proposed toll adjustments are posted on the Commission's website. The direct address is www.drjtbc.org/new tolls. As alluded to earlier, changes are proposed for the Commission's Easy Pass discount programs. In 2021, we're proposing to maintain our frequency-based Easy Pass commuter discount for Class 1 vehicles, but reduce the size of that discount from a 40% retroactive credit to a new 20% retroactive credit. This discount can only be applied to transponders administered by the Regional New Jersey Easy Pass Customer Service Center, the Commission's provider. This discount is applied when a motorist takes 16 or more toll trips across Commission bridges in a calendar month. If approved, the discount would continue through 2023. In 2024, however, this discount would be eliminated. The Commission's only other Easy Pass discount, a 10% reduction on Easy Pass equipped commercial vehicles traveling during overnight hours, would be eliminated this year. Commission staff originally considered raising the Class 1 Easy Pass rate to $1.50 this year. After review, it was decided that this proposed increase should be phased in over 3 years. So the increase to $1.25 this year would be increased by another 25 cents to $1.50 in January 2024. This proposed change would also affect the combined charge for a Class 1 vehicle with trailer in tow, making it a $3.50 toll in 2024. If the proposed toll adjustments are approved, the Commission will still have the region's lowest highway bridge toll rates. The 2-tier tolling structure also would establish uniform rates at the Commission's 8 toll bridges. The $1.50 Easy Pass car toll in 2024 would be half the cost of the cash toll by plate rate. This $1.50 rate would apply to any Easy Pass passenger vehicle account, regardless of its issuing agency. Over time, the adjustments should offset the losses the agency has incurred and continue to incur as a result of this pandemic and economic downturn. The proposed changes would also provide sufficient funding for new capital projects, generating sorely needed construction-related jobs. With improved financial metrics, the Commission would be better positioned to avoid bond rating downgrades and increase borrowing costs for future projects. The adjustment further holds out the promise of building the Commission's financial reserves to a level where small-scale projects could be pursued without need for borrowed money. Finally, the proposed adjustment would enable the Commission to meet the terms of its financial resilience policy. The Commission could improve its creditworthiness and credit rating to ensure cost-effective access to capital markets. Financial models show the agency could achieve a 2 times debt service coverage ratio, a key benchmark for gauging a toll agency's financial health. The Commission also could further strengthen its prospects for maintaining a sufficient balance in its indenture-prescribed general reserve fund. This hearing is just one part of an extensive public comment process for this proposed toll adjustment. Comments provided at this hearing will be included in the official record to be compiled as a report to the agency's Board of Commissioners before they deliberate and vote on the proposed adjustments. Commissioners are expected to consider the proposed toll adjustments at their March 29th meeting. Multiple ways remain available for the public to be heard in this proposed toll adjustment until 4 p.m. February 26th. Online, people can use the comment form at www.drjtbc.org/toll-comments. A toll-free answering service can be reached by dialing 1-855-721-0444. There is a 3-minute time limit for this service. And there is the U.S. mail. Letters can be addressed to the attention of Community Affairs Director at the DRJTBC Administration Building, 1199 Woodside Road, Yardley, Pennsylvania, 19067. So, we've stated our case for the proposed toll adjustments. Now it's the public's turn, your turn, to be heard. The hearing officer will now explain how this virtual session will proceed before taking comments from this hearing's registered participants. Thank you for taking time to listen and to be part of this important process.